The Fraser Valley market is shifting again. Prices continue to soften, inventory still high, and for the first time in a while, the outlook for next year is actually becoming a bit more clear. If you've been waiting for a straight answer on where things are heading, this update will give you exactly that. I'm Matt Romero, and I help buyers and sellers make confident decisions in the Fraser Valley market. Today, I'll walk you through the latest numbers, what they really mean, and what I expect as we move into 2026. So just to get started here, what we're going to do is we're going to look over the Fraser Valley market stats that just came out today, and then we'll move on to the Langley market stats. So overall activity in November, we had 943 sales, which was down 16% from October and down 17% year over year. So we typically do see a seasonal slowdown in November, December. However, we just came off 2 months where we saw sales increase. And I think a lot of people were expecting that to kind of carry over into November. So it being down 16% from October, I think that we have a lot of people that have their eyes set on 2026. Now, looking at new listings, we had 2,210 new listings hit the market in the Fraser Valley, which was down 26% month over month compared to October and down 7% compared to last year. Now that brings the total listings up to 9,201 for the whole entire Fraser Valley. Even though we saw a slight dip from October, we're still 47% above the 10-year seasonal average. So this keeps the whole market in what I would say is a buyer's market. We have our sales to active ratio coming in at 10%. Typically, when you're in a balanced market, you're anywhere from 12 to 20%. So coming in at 10% signals that we are in a buyer's market. If we look at days on market, we have detached houses averaging at 52 days, townhouses averaging at 37 days, and condos averaging at 41 days. Now, the number for condos for the average kind of surprises me just because there's so many condos on the marketplace right now. Obviously, this is an average number, so well-priced condos that sell fast bring that number down. And then townhouses being at 37 days is no surprise. That is a very hot market right now considering the market that we're in. And I think it's largely due to there's two main buyers for that marketplace. We have first-time buyers and sellers, so people that are moving up the real estate ladder. And then first-time buyers are looking at townhouses right now because the entry level or the entry point for townhomes is much lower than what we've seen over the last couple of years. And that gap between condo to townhouse has shrunk a fair bit. So it's allowing people that have been in a condo for 4 or 5 years to sell, even if they do take a little bit of a loss, and buy into a townhome that is selling less than where it was 3-4 years ago. Okay, so now if we look at the benchmark prices, we had detached houses coming in at $1,405,500, which is down 0.6% month over month and down 5.4% year over year. Townhouses was 778,700, which was down 0.8% month over month and 6.8% compared to last year. And then condos came in at 496,500, which was down 1% compared to October and down 6.9% compared to last year. When we look at all this data here in the Fraser Valley, we can see a couple of things. So what does all this mean? It means that prices have been softening gradually, and the market is starting to hit closer to numbers that we were seeing in 2023. So if we rewind to this point last year, I'm not surprised that the numbers this year are coming in lower because last year around this time, there was a lot of optimism about where the market is going. We had just come off some rate cuts. Everybody was looking at 2025 to be a bounce back year. And the first few months of the year, there was some legs, but then it quickly died out. So we'll move on to the Langley snapshot, then we'll continue to talk about 2026. So now looking at Langley, townhomes had 66 sales, which was up 20% year over year. So this goes back to what I was saying earlier, that townhouses are a very hot market right now, despite the watered down market that we're in. Now, that was down 7% compared to October. Condos came in with 68 sales, down 20% year over year, and down 9.3% compared to October. And then detached came in with 57 sales, which was down 27.8% year over year and then down 13.6% compared to the month prior. Again, these numbers don't come to a huge surprise for me. Being in the business day to day, you see a lot of what's happening out there. And, just this kind of gives a idea of where the market is at right now. There's a lot of buyers out there looking. Open houses have seemed to pick up a little bit over the last, I want to say, 2 months. Activity's been a bit higher, but there's just a lot of hesitation with buyers in the marketplace right now. They don't want to take action on what they're seeing. So there's a few key elements here that we'll look at when we start looking at the outlook for 2026. So the biggest thing, or the biggest topic that we've seen throughout the year, is interest rates. What are they going to do? How are they going to remain the same? Are they going to go up? Are they going to go down? And since the beginning of the rate cut cycle, we've seen them drop 2.75%. So I believe that we're likely done rate cuts for a while. I mean, we could potentially see some next year in the first half of the year, but I wouldn't be surprised if we remain the same in the first half of 2026. The October inflation came in at 2.2%, which is directly in line with their 25-year average. So again, I wouldn't be surprised if rates remain stable for 2026. So now looking at 2026, what does all this data mean? What do the rates mean for 2026? Where are things going? Like I mentioned before, everybody had high hopes for 2025, and the market just never picked up the legs that everybody was hoping for. Now, as we go into 2026, we may see those legs pick up a little bit more. As we just talked about interest rates, stability is a big thing that buyers look for. And knowing that rates have dropped 2.75% since the peak and are now in a much more palatable place, I think buyers are going to wait to see what happens here in December with the rate cut announcement. And then if we don't drop rates again, which we likely won't, I think that will instill some confidence in buyers that the rate cut cycle is done. The time to act is now. So with that, and how we mentioned earlier that there's a high amount of inventory, that creates real opportunity in the marketplace. So I think with buyers, the psychology needs to change a little bit, because there's a lot out there that we're just waiting for the best interest rate. But we've seen those drop. We've seen prices drop. And I don't really think that the prices of real estate are going to drop significantly more. I think we're hovering that bottom at any time here between now and in the first 3 months of 2026. So I think it's a market with tons of opportunity for buyers and also sellers that are working to move up the real estate ladder. Now, as we talking about high inventory, I think that may remain a topic as we head into 2026. There's close to 1 million renewals across Canada here in 2026. And a lot of those people are coming off of very low interest rates. So we will see some payment shock for some of these sellers. And that may motivate more people to have their homes listed here in 2026. So again, this is great news for buyers and across all marketplaces. I mentioned the spread between condo to townhouse. The other spread that's not as big as it had been before is townhouse to detached. There's some great value in the marketplace right now for detached homes. So as we go into 2026, I do expect the prices to remain stable throughout the year. I don't think we're going to see any market that becomes very highly active where we're seeing multiple offers and anything of that sort, unless a home is priced well below what the market average should be for that home. So I think the biggest topics that we'll see is going to be high inventory and hopefully some increased buyer confidence. So if you're thinking about getting into the marketplace, there's a lot of things that you can start doing proactively now as you're planning. And like I said before in my first time home buyer video, talk to a mortgage broker, set out a financial plan to see, what the goals are. Are you thinking of maybe selling your home so you can upsize, or are you looking to finally enter the marketplace? I think 2026 will present some great opportunities. And I think that the market will gain some stability. I think all the things that I've mentioned already, interest rates, high inventory, buyers hopefully bringing back some confidence, sellers actually coming down to earth with their pricing. Like, these are things that we've been struggling over the last year with. That's a topic that I didn't even touch on, is the unrealistic pricing that we've seen on a lot of listings. We've seen new data come out over the last 3-4 months as sales have slightly upticked, That's just it's given sellers real data of what their home should be priced at. And I think going into 2026, we'll have more realistic sellers that aren't just trying to test the market because they know what the market is. We'll see buyers hopefully gaining confidence due to high inventory and lower interest rates. And I think we'll see a market that just treks along through 2026. I don't think we're going to have any big headlines of an amazing real estate year, but I do think that we'll have improvements compared to 2025. So 2026 is shaping up to be a calmer, more balanced year. Stable rates, high inventory, and softer pricing creates opportunities for buyers, upsizers, and clear path forwards for sellers who are ready to adapt to today's numbers. If you're planning a move in 2026 and want a strategy built around your goals, I'd be happy to help you map that out. Thank you for watching, and I'll see you again.